Welcome to Commercial Real Estate Pro Network's CRE PN Radio. Thanks for joining us. My name is Jade Aaron Gross. This is the podcast focused on commercial real estate investment and risk management strategies. Weekly, we have conversations with commercial real estate investors and professionals who provide their experience and insight to help you grow your real estate portfolio. Today, my guest is a returning guest and a favorite. His name is Vinney Chopra. Vinney is a multifamily syndicator, a senior living care facility developer, and also a mentor for investors, and an author and a podcast host, and on and on and on it goes. He's multi-talented. And in just a minute, we're going to speak with Vinney about the opportunities in multifamily and also senior living. But first, a quick reminder, if you like our show, CRE PN Radio, there's a couple things you can do to help. You can always like, share, and subscribe. And also, we'd love to hear from you. Leave a comment. Also, if you want to see how handsome our guests are, be sure to check out our YouTube channel. You can find us on YouTube at Commercial Real Estate Pro Network. And while you're there, please subscribe. With that, I want to welcome my guest, Vinney. Welcome back to CREPN Radio.
Thank you. Thank you. It's such a pleasure to be back again, Darren. And we have been together many times on the show.
Many times. Yeah, there's a whole list of interviews we've done that are on. If you go to the YouTube channel and there's an actual a list of interviews we've done there. So, and we've covered, a spectrum of topics, and I always appreciate the opportunity to talk with you. Sure. But it's been a little while since we've talked last. I think last time we talked was kind of at the front end of COVID. And I know at the time you were not shifting from, but incorporating more. You were growing. Instead of just multifamily, you were getting into the senior living and, branded that and developing and you were, as always, excited and smiling and happy and things were going well. And so before we jump into it, maybe just a brief kind of an introduction. If you could tell just the listeners kind of your 2-minute who you are and your background a little bit.
Sure. I came from India with $7, some of people know, and I'm a mechanical engineer. I came here to do my MBA in marketing, and that just sales and marketing got me so fired up. I never looked back. So I've been in that business for a long time, have been an investor for over 40 years now into single family homes and about 15 years in multifamily. So that has been the big crust of my career with the real estate, commercial, and done 34 syndications, complete syndications, and a little over 4,700 units, and about $500 million in portfolio with the AUM, where I'm the single. Maybe one or two times I had partners, but most of the time I'm the principal and the general partner in the deal, And that's a little bit about me. I know I'm very fired up about multifamily like everybody is. And millennials, as you know, they definitely will need multifamily. We were with even offices now with COVID or after COVID, a lot of people are working from home. So 2-bedroom in an office, 3-bedroom in an office, will be probably developers will be building. Second one is the immigration, which we haven't seen that much influx in the COVID, but that's another one where the rental units are needed. The third is my most favorite one, which is the tsunami, silver tsunami. 10,000 baby boomers are turning 65 every night in USA. So we're like 54.7 million 65 plus right now. In the next 30, 35 years, there'll be 100 million. Oh my gosh. So that's a big number. And there'll be huge shortage for the senior living, independent living and all that. And then assisted living and the memory care is where we have honed in our companies. I found a great partner, Shahid Imran from Pakistan, who actually have been building these assisted livings. And here I was thinking, how can I get into it? So now we are joined at the hip, So we are building them 5 to 7 acre of land with a lot of great luxury amenities and all that. So that's a little bit about me. Yeah.
No, that's awesome. Well, let's talk just a little bit. I think the first thing I wanted to congratulate you on is 34 syndications that you've gone full cycle on. Is that right?
Well, I have sold 25 of those
Okay.
already. So that's full cycle on 25. And one more I'm selling now, 26. And then I'll be left with quite a bit bigger ones, like 52 million one, 35 million. We just bought a 35 million one in Austin, Texas, which is a very big for us because we got it at 113,000 per door
Wow.
somehow last September. And now the vicinity, the neighborhood is going at 153 a door. Wow.
Oh my gosh. Wow. And you didn't do anything yet. You haven't
I know nothing.
applied your Midas touch or anything to it.
I don't know what happened there.
Wow.
But my gosh, we increased value from 35 to almost 47 million, in just 1 year, just in 1 year.
That's terrific. That's terrific.
Yeah.
So
Austin is on fire, as you know, yeah.
yeah, no, definitely the Sun Belt states. I mean,
Yeah.
Texas and Florida and Arizona, I talked to other people about, and I mean, it's all kind of a tough to lose in those states. I think just based
No.
on people are moving there. You cited the millennials, the immigration, and seniors look to the
Yeah.
Sun Belt states
Yeah.
for retirement. So let me ask you. So you've been doing this now for 15 years.
Yeah.
There's definitely been a little bit of a change in the climate. I mean, as far as just the workplace and just the way we live with COVID and stuff.
Yeah.
In fact, I think I can't remember the last time we talked, but I can remember it was just kind of some of the protocols that were being instituted because it was still kind of a not an interaction kind of thing, but it's more about how to create barrier and space between people and all that. And I think we're now a little bit beyond that. But you indicated just even in the kind of the intro here about millennials looking for a bedroom or a workspace at home kind of thing.
Yes. So true.
And you look at your portfolio in what you have had versus what you have or may purchase in the future, will that change some of your thoughts or designs on what?
Dramatically, Darren, I mean, I have been buying C plus, B minus older properties. Now we are buying more newer properties, which is good, and also with the business plan to renovate them too. Like I just won a deal in Tennessee. I flew there, 15 bidders were there, and we got the deal. And we just paid tad higher than what other people were paying, we found out, and also hard money day one. So those are great deals, but they are very hard to find. And they were fully renovated units the seller had put in, and brand new roofs and brand new parking lot, everything. So we paid a little bit higher, but we have more potential to increase the rents. So anybody really looking into this market, they need to, underwrite, but look for the best nugget. Don't jump into it if you don't have a strong business plan, So this property actually, they renovated it, but the rents are $700 to $800 lower. What?
Wow.
I know. I
Wow.
can't believe it. Next property over in Tennessee, where I'm buying, it's like $600, $700, $800 lower rent in this property because the seller is a flipper. So they just wanted to renovate and keep the rents low so that the occupancy goes higher, So we'll be able to, jump in and we'll educate, the residents that they have been paying so low. And it's all bills paid, which we never do. Millennials live there, but they are just not shown that, hey, you have to pay for water and gas and trash and internet and cable. So they just kind of jumbled it all together in one price, anyway.
Well,
But
that sounds like a home run just based
it
on
is
you know
kind of
that.
like a home run, right? Really, really
Well,
excited about it. Yeah.
because I think one of the things that I always appreciate in talking with you, and we've had the conversation about capital improvements,
Yes.
you know, and like you just mentioned, having a plan,
Yeah.
you know, having a business plan, and
Mhm.
and then implementing that so that you can get the higher rents, the higher
Yes.
NOI, and the higher valuation, so that you can, whether you exit or refinance or whatever, you've got that built in there. On your on the properties that you, I mean, this one sounds like it was fairly well renovated, so it should be,
Yes.
I would think, a faster um, upgrade as far as your NOI. Is it going to be
No,
easier, or
you're
do you have to
right.
wait till
Yeah. It will
lease
be there and
release
not
or?
only increase in rents, of course, but we also found there was a duplex on the property which was not counted in the rent roll. So
Oh
when
my,
we went to tour it, and we found that it could be a big parcel where we could build 8 townhouses also. So
oh
we're
boy,
going to demolish the duplex and build fourplex and fourplex, 8 of them, which will rent for 2,200 a month. We found out in
per
that area.
door?
Yeah,
Oh
2,200
my,
a month. Yeah,
per door. Wow,
per
that's
door,
huge.
per door. Yeah,
And there was no accounting for those two
yeah.
units when
I
you
mean, they had said 109 units. It's a smaller property than what I'm used to purchasing, but it was such a good deal. We had to take it. So it was 107, but the 2 units were not shown on the rent roll. They were like vacant, but they were duplex. So we are glad that nobody lives there, and we'll just demolish them and then we'll build a brand new, class A with amenities and all townhouses. Yeah, yeah,
Oh, that's all. That's great.
yeah.
And now that you've done so much developing, I'm guessing that is kind of second nature to you, is it?
It is. And over the years, I have done some really heavy lifting with some burnt units I bought, and renovations keep on going, all over, the foundation challenges and the roofs leaks and you name it, right? So it's quite okay for us. And then with the senior assisted living, where our whole game plan is to buy the land and then go through the ordinance changes, get the permits, and then build on it. So we are the developers. We buy the land and we do all the ordinance changes and then infrastructure, and then we manage them also. So it's a whole cycle of 2 years. 2 years it takes us, but that's it's something which is unique because in our assisted living and memory care division, it's one story only, and there are 3 to 6 courtyards are there where our seniors can go out and have exercises and putting green and waterfalls and swimming pools and all. But then inside we put spas, salons, uh, billiard rooms, exercise rooms, then library, and also the movie theater inside, plus the dining halls. So it's a very nice luxury, community that we built. And
No,
that's what the Hampton Manor is, our brand that we are hopefully building. We're building 9 locations right now. We have built 23 already.
oh
So
my
that's
goodness, 20.
32.
You've built 23 already, and
Yeah,
you've got
my
9. Oh my
partner
gosh.
had built 23 already. And now
Okay.
we are building 9 locations in just Florida alone.
Oh my goodness. I I knew that you were busy, but that's a plate full and more. That's great. So I wanted to ask you just a little bit about. I mean, we talked a little bit about COVID kind of shaping the
Yes.
marketplace in multifamily. Let
Mhm.
me ask you just about the senior market. Knowing that originally the senior population was considered to be at higher risk,
Mhm.
um, and now through vaccinations, it
Yes.
appears to be relatively under control. There's talk about boosters and that, but
Yeah.
I've not paid a great deal of attention, but I read the news occasionally and see that, by and large, the number of persons that are the people that are most affected by COVID or any of the variants appear to be the unvaccinated. And I'm not
Yes.
trying to make a debate about it or whatever, but I'm just
Mm.
kind of curious, based on that, are you seeing any kind of deviation from what you'd planned for the seniors, or is that I mean, just the sheer demand and the numbers you talked about continue to fuel that, and without any kind of
Good point, very
reset?
good point. Darren, what we found was like we locked down pretty fast. If I recall, when we talked last in March or April
Right.
and 2020, we locked down, we didn't have a single death, and in our senior assisted livings, we have 14 of them we are managing still. So they are like, 75 to 103 years of age,
Wow.
and seniors are there. So nobody, contracted or died or anything. I know nursing homes were more prone to, and a lot more deaths came from there. But now with double vaccination, the market has opened up quite a bit. Actually, we got a lot of calls, a lot of requests to look into like Punta Gorda. I think we have 17 deposits already, and we are 70% only built. So a lot of people are calling us to bring their mom and dad when we are done. We open the gates, then we would like to be 50% occupied. It's 88 units, I think. We built 88 to 92, no long, no bigger, no two-story, no three-story. Never, ever we'll build that. And the other good part is that we want a quality of life. So 5 to 7 acres of land minimum, so that they can really stretch out, and have all these great amenities there. Yeah. So COVID has not hurt. Well, it did hurt last year, but it's opening up. And especially some of our new developments won't be opening until the fall of 2023. So
Right.
we feel even the effect will be even less, then. Right, right. And especially because we don't have the distances and we don't have the elevators in our assisted livings. And also the space is so high, pretty large. So distancing is very easy for us, right? To take care of all that, right? Yeah.
No, that's that's great. I'm glad to hear that, because again, I think on the front end of COVID, there were a lot of questions,
Yes,
what was going to happen and how are things going to be affected, and
totally.
glad to hear that your outlook is, the minor changes with the multifamily, but as far as the senior living, it looks like that's a still full throttle,
Yes.
go fast market there for you. Um, well, let me ask you this. So do you see any changes in the marketplace? I mean, you cited, the millennials and the immigration and the seniors. I mean, those are all expanding populations. Is there anything based on the work from home? I know in the past when we've talked about, do all of the research on basically the demographics and make sure there's a growing community and that there are jobs
Mhm.
coming there. Have you seen any of the work from home change that dynamic at all, or are you able to pinpoint anything like that?
That's a very good point. What you just mentioned, actually, you're right. We are finding a lot of people are enjoying the lifestyle of coming out of the bigger MSAs, as big cities, and going into suburbs. I mean, we live in the Bay Area, East Bay Area. I cannot believe how the prices have shot up, in the suburbs, like 30 miles away from San Francisco, where I live in Danville. But you're right, a lot of people are also moving to other places where their family is, or their spouse is from, and they would like their kids to grow up there, right? So a lot more flexibility is there. But at the same token, I feel those jobs which are more remote are tech oriented most of the time. Service, you have to be where the service is, right? So Austin, we are really big. Tennessee, we are very big. Knoxville, I'm very big on. Chattanooga, of course. And then Atlanta is just growing like crazy, crazy in every direction. Florida, we are very big, and Texas, I mean, even Houston. Oh my gosh, so many great opportunities are there in San Antonio, Houston, and Fort Worth and Dallas and Aston. So I haven't bought in Arizona that much, but I know we'll be building senior assisted living as we are moving from East Coast to the West Coast. So
Yeah.
we got a big plan actually of 9 more years this decade for building $2 billion worth. I know that's a big goal, but we are going for it. Yeah.
Well, that's great. And
Yeah.
and I know on the multifamilies, when you syndicate those, you raise the capital, exercise your business plan, exit, distribute the proceeds.
Yes.
Um, do most of your investors, are they signing up for the next one, or have you had more money than you know what to do with? Or I mean, I know I've talked when I
Good
talked to you
point.
before, is
Yeah.
a few minutes to
We
raise
raised,
millions of
I think,
dollars.
26 million last year. We raised 26 million. And this year, what I did was actually, to be truthful, I designed a fund. So this year, I launched a fund already. It's a $50 million fund, which I can buy about 200 million or close to that, product. But what I did was, in this fund, there are four-pronged attack to mitigate the risk. Many times, syndicators like me and others have one property and they do a fund to raise money for that particular property. If the property does well, our investors do good. If it doesn't do well, then they go down with the same one asset. So in this fund, it's a 506C, which is my first one, which is accredited investors only, but we can advertise, we can talk about it and everything. But what are the four different ways I invest the money from the fund? One is multifamily, which is B class or B plus or so. That's number one. Second one is giving the equity from the fund to start the senior assisted living constructions. So when I used to raise that separately, now I raise it in the fund and then do those. Then the third thing is, when we build these senior assisted livings, we are buying them. Once they get close to stabilization, then we are purchasing them into the fund also. Like we are buying right now, 17 million, and it's worth about 22 million easy. Once we take the 45%, I think it's 43% occupancy right now, assisted senior living that we built in Cape Coral, we are buying it for 17 million, cashing out the investors who brought the money before, and then we're going to keep it for 7 to 10 years. So that's going to be the third prong. And the fourth one is hotels. So
Oh,
in the same
hotels.
fund, the money can be put into four different places. So I look at it as a multifamily. The resident has to pay upfront, right in the counter, to go upstairs and sleep one night or 4 nights or whatever. So it's almost like a apartment. I consider it as an apartment, but the IRRs are very high, on the hotel. Yeah.
On the hotels, are you buying existing, or are you developing those, or
Okay, we are buying existing. Actually, we just bought one with my major partners, and we lucked out. Actually, we bought it just before COVID. We didn't even know it. We bought it in an auction, Hilton Garden Inn in McAllen, Texas, for I think 6 million. We bought it for, and all cash, right? But then the medical staff and nurses chose our hotel to live in. What are the chances of that? So our whole 2020 was in black, and we
oh, that's
made
great.
profit, and the value went up. We refinanced it during COVID, and it's worth 12 million now. What?
Oh, doubled your
It's just
money, more than double.
ridiculous.
That's
It's
that's amazing.
ridiculous. Ah,
Well, the good news is always, I mean, it just it follows you. That's I mean, that's I was wondering about that, just the hotels, just how
yeah,
hard they were hit
they
in
were
just the whole COVID
quite a
thing,
bit,
with lack of
quite a bit.
travel and
Oh
that. I
yeah.
know.
Yeah,
Um,
no, we were ready to pay mortgage from our own pocket every month, right?
right.
Because when we closed it on December 31st, in February, we were 16% occupied. It was so low, right? But then, boom, we got some contracts coming in, and then nurses and doctors, and lo and behold, we were averaged, I think 72% we average occupancy.
That's great.
Yeah.
Let me ask you something. I find a lot of people, and I would think myself tend to think in this way, is just kind of stay in a lane. You started off and you started off in single family a long time ago, but you've been in multifamily and been very successful in multifamily.
Yeah.
And you were aware of and curious about and researching about the senior living and found your partner and got into that. The hotels and that, how do you in your mind reconcile, or do you see it all the same, it's just a different silo? How do you look at it any differently, or is it just all it's
Again,
a business? And
you know what you said is so right there. And I don't know ABC about hotel, to be truthful. But what happened was I found some other great partners, but they seeked out to me kind of thing. And they are really great at it, how to underwrite it, what to look for. And, one of the partners is also very much hands-on a weekly basis. And I also get into the meetings now, but we have Hilton people managing the asset. See, you have to have Marriott is another one we are purchasing, looking into that now, La Quinta, Marriott's and all. But mid-tier one, we like to get for the mid-tier, but the cost segregation is amazing. The tax write-offs are amazing. So a lot of high net worth people love to invest in hotels. So that's how I kind of, again, with law of attraction, these my other partners are very strong in hotels, and I'm also learning, and I'll be able to, work with them. Yeah.
yeah, well, I would think that your success and the other, the multifamily and just the networking you've done and the ability to raise capital would automatically present additional opportunities to you
Yes.
based on that. And kudos to you for all your success and your the energy you bring to every interaction. And I wanted to ask you too a little bit about your coaching. The recently, I think it was last week or 2 weeks ago, I was having coffee, and one of the guys I was talking with, he's working with you, and I was going, oh, I haven't talked to Vinny in a long time, I need to reach out to him. So tell me about that, because I know that you've authored a couple of books,
Yes.
and I know that you've done coaching, but it hasn't been something that you've been really, when we've talked, you've really tooted your horn on as much as it was something that you were doing. Tell me a little bit about your mentoring
Surely, I would
program.
love to. Yeah, I started my multifamilyacademy.com is my company. And actually, a lot of students were asking me a lot of questions, and I was answering them the same way again and again and again. Then we said, why don't I just keep on recording all my answers? And that's how it started. And I think, 1,000 lectures now
Oh
in
my
my
gosh.
academy. It's online. People can learn everything what they can do, what I'm doing, through going through online for $2,500 only, because I make my money in buying and selling and syndicating. I just want to, give myself back, to the community at very low price. I'm even coming out with a new course now for $997, the whole thing. And they get everything on a silver platter, all my worksheets, all my PowerPoints, you name it, underwriting tools, everything included. And then I do $7,500 group coaching. I do that. So I have some students in there where I teach myself. I have no other coaches. I teach every Wednesday, actually. Like after this call, I'll be meeting with them at 4 to 5:45 every week. I love that time to do deal analysis and going over their questions and having other students share their successes. And it's a motivation, every week motivation, moving the needle, I call it. And then I have personal coaching. So I have 5 students only, and they pay 25 to 35,000 for me to teach them and get them on a very quick path. So that's my coaching program. Yeah.
No, you'd certainly be one to mentor. I mean, just all the conversations we've had, the experience
Yeah,
that I know you have. I mean,
yeah.
you can certainly walk the talk, and
Thank you.
that's I would think anybody seeking that help would be in good hands to work with
Thank
you
you.
there. So
Thank you.
appreciate that. So, Vinny, let me ask you the question I've asked you a couple of
Yes.
times, and it's one that I like to ask all my guests. And I would ask that in this time that you kind of look at it from just kind of more of a broader picture based on, and I'll let you frame it however you want to, but just knowing all the experience you've had and kind of as you look forward and stuff, the question's about risk, the biggest
Mhm.
risk. And I, as an insurance broker, always work with my clients to just assess risk.
Yep.
Can we avoid it? Can we minimize it? If we can't do either of those, can we transfer it? And that's where the insurance comes in. And if you're looking at your situation and kind of the way you see the different silos that you're operating in, and kind of the economy and the governmental, et cetera,
Mhm.
um, Vinny, what do you see as the biggest risk?
Wow, that's a very good question. Darren, I'll say that as a businessman, any entrepreneur should always, always, always get the insurance, to combat the risk, because we syndicators are using other people's money, to get into LLCs and buying these properties and all that. If there is a slip and fall, or if the contractor came on the property not properly insured, I just believe that we need to have the highest amount of insurance and umbrella insurance at the same time too. Director's insurance, I've had that in the past. Cyber insurance, I've had that. I've been, maybe 4 big lawsuits, but I just kind of walked away from them because I had people like you, who really took care of, and they were able to write good policies where they settled, mediated, and settled, with the plaintiffs, I think, right? Defendants. We are the defendants, right? Yeah.
Right.
All those things happen in life. So we should really always be looking around us. What can go wrong, right? Even in the due diligence side, when you said, risk involved, a lot of risk is there because we get the key to the property, then it's our choice. I mean, it's our baby, no matter what we did. So we need to really mitigate the risk, I call it, by taking proper measures about, like, I talk about like sewer lines, running the cameras through, and then, foundation people, termite people to come digging deeper into, if there is some termite and mold and all that stuff. So, no, those risks are there. As business people, we need to, it's the small amount we pay. It's an investment. That's what I say. I mean, one time in my life, I was paying 1.2 million insurance premiums for my so many properties. Yeah, yeah, So that way, it was definitely needed. So risk factor is very much there, and especially for us syndicators, and we need to really listen to people like you. Definitely.
Well, I appreciate you reiterating that. And I'm just kind
Yeah.
of curious too, as you have expanded your circle, do you feel like any of your risk of have, do you see any risk that have grown? I mean, do you feel like there's more risk when you get into something new that you're not as familiar with? Like maybe the multifamily, now that you've done 25 deals full cycle, I'm guessing you could pretty well do that in your sleep based on just, what you need to do, and a lot of things you've probably seen. But as you go into, like, now you're talking about the hotels. Um,
You're right. I think again, the biggest thing is like in hotels, again, a lot of people are coming, adhering to the rules and regulations,
mhm.
especially in COVID and all. We had to run proper businesses because otherwise, one bad uh, COVID, positive, right, can really spoil the whole thing. So you're right, the risks are there. Even in the assisted living now, see, we are dealing with much older population. And they have entrusted their health to us. So we want to make sure our caregivers are well taken care of, and the nurses and everybody, and the chefs who are preparing the food, all those things, right? So you're right. I mean, these things are something many times we don't look at it, stare, right into it, but we need to look at, okay, in whatever industry we are, what are the different insurances, and then pick and choose, which ones we should pay the premium and have it. I mean, I have always had $8 to $10 million umbrellas on every asset, every single one. Like I had 34, right? So the key thing is you got to be properly insured. You gotta be. Hopefully you don't have to use it, but when you need it, like I just settled a case for $500,000. Somebody shot one of the tenant in the leg, kind of thing, right? And these people chased him from hamburger place.
Oh
So
boy.
something went wrong over there, but then he came into the apartment complex and all that stuff. So yeah,
Yeah, no, there are some sad, crazy times out there if you
yeah,
flick too far. I mean, between all the civil unrest and
yeah,
it's I mean, there's a lot of optimism, a lot of reasons to be optimistic about what's going on, but
yes,
there's
yes.
certainly some troubles if you look for them, and
Oh yeah, no,
so
definitely. I
yeah.
would say so. Yeah.
So, well, Vinny, where can listeners go if they'd like to learn more or connect with you?
Sure, there. Actually, my website is vinneychopra.com, Vinney Chopra, Chopra, Chopra.com. And they can always, I'm on Instagram, Twitter, YouTube also now, vinneychopra.com. And then just Google me, you can be there. My two books are there on Amazon, Apartment Syndication Made Easy, then Positivity Brings Profitability. My third book is coming out, which is on senior living investing made easy. So I'm really very bullish on senior housing. I want to give back to the community. I'm a senior myself. I'll be 70 years next year. So I really feel that, I want to do more and more for the fellow citizens. Yeah.
Oh, it's awesome. Well, Vinny, it's always a joy to speak with you. I'm so glad
Thank
we're
you.
able to do this
Thank you.
today and catch up. And I wish you continued success and great
Uh,
health.
no, same to you, Darren. It's such a pleasure to be with you, and God bless you and keep up the great work. And we'll see each other some other time. Yeah.
I look forward to it.
Thank you. Thank
All
you.
right.
Bye.
For our listeners, if you like this episode, don't forget to like, share, and subscribe. Remember, the more you know, the more you grow. That's all we've got this week. Until next time, thanks for listening to Commercial Real Estate Pro Network's CREPN Radio.